And then the third company that we're looking at, another big industrial, is General Electric. And GE, by the way, still a favored stock to check on the part of Yahoo Finance users. It's our #2 trending ticker this morning. So that company coming out and burning more cash than analysts have predicted, and the company's improvement in its cash position, its cash burn position, had been a source of strength in 2020. Aviation sales also down 28%. So that also a source perhaps of disappointment, even if you look at the overall earnings per share numbers beating, revenue missing, the shares off by about 0.75%. Myles, you watching GE in particular, this has been one that's just amazingly how many people still kind of hold this as a legacy company.
Yeah, I'm not really sure what to make of GE in general at this point in its turnaround. I mean, they've stabilized the cash flow to some extent. I think there's still an expectation that there's going to be more paring down of the assets they have there. Obviously, the aircraft business was an underperformer in the latest quarter. But yeah, Julie, I think, to your point, we talk about meme stocks. It's sort of the original meme stock in a way, between the GE pension and between the low, and this one always amuses me, but it's the way that retail breaks down. The low price per share of GE makes it more widely held. And if you go back over the last 5 years, obviously it's been a low per share price. If you look at data, like back when we could see the public Robinhood data, GE and Ford were always two heavily traded stocks because they're names people know, and also they have low per share value. So, which doesn't impact value of the company. But yeah, I mean, I'll be interested. We're going to talk to an analyst later on in the program about GE's quarter. I'm just interested in how the analyst community, Sozzi, is thinking about this story, which had a lot more clarity when Larry Culp came in as the CEO, and now we're, I guess, 18 months or so into his reign, and we know his playbook. But just how the street is thinking about our progress along that journey, I'll be interested to get a check on that.
Full disclosure here, Myles and Julie, I opened up the GE earnings release this morning, and the first couple lines suggesting margin improvement. So I got a little excited. I'm like, all right, GE's coming back. Larry Culp, he's earning his big fat paycheck and compensation. Good for him. But as you go down and you look at the business segment results for this company, operating margins in the power segment, negative. Operating margins in the renewable segment, negative. Margins in the aviation business, down year over year. The other business, the healthcare business, margins down. And they reiterated their outlook. So this wasn't a good quarter for GE by any stretch of the imagination. And more, GE, I think, is very clever on how they word things on their earnings releases. This wasn't a good quarter. I'd be surprised if analysts come out here positive after this one.